Last week, the Federal Reserve in the United States finally hiked the interest rate back above zero, ending 7 full years of cheap credit. Nobody really knows what territory we're in here. This is completely uncharted. So to understand the situation better, as well as how Bitcoin factors into the next and the following years, we have two expert commentators. I'm Rick Falkvinge, and this is Liberty Talk 46. Zero Hedge has called this period in time the apogee of history's greatest credit inflation. If you track interest rates back through history, you can see that this low interest rate has not existed in the past 5,000 years. Not since Sumerian cuneiform has this kind of interest rate been traceable. In a Q&A the other day at the Federal Reserve, some people were shockingly honest and candid about the situation, saying, we don't know how to raise interest rates because nobody here in this room worked at the Federal Reserve last time we did it. China has been borrowing heavily against future growth, and that growth has stopped, leaving people to scramble for the chairs as the music is no longer audible. China has significantly overstated its earnings, almost at an Enron scale. Officials have gone on the record saying that numbers have been inflated by at least 20%. And according to Bloomberg, this equates to about 1.2 trillion US dollar equivalent in Ponzi financing. Ponzi financing being when you're loaning more money to pay off the interest of your old debt. The other two forms of financing being hedge financing, where you're borrowing money and you're paying off both the interest and the principal. There's also speculative financing, where you're choosing to just pay off the interest from your actual earnings. When you're borrowing more money to pay off just the interest rates, that's Ponzi financing. And as a result, China capital controls are soaring across the board, leading people in China to scramble for new safe havens for their assets, which, by the way, is why we're seeing Bitcoin having spiked a bit for the past, week approximately, or several weeks actually. In Italy, 4 banks are failing. There was a 4 billion euro bail-in by the Italian government last month, which was completely under the media radar until a pensioner committed suicide because their savings had been wiped out. Bail-in meaning a savings confiscations. So the Cyprus model, where governments just go in and sweep whatever they want from banks, is seeing contagion. Now, this shouldn't come as a surprise because 9 Italian banks failed their stress tests last year, according to the Wall Street Journal. Why didn't somebody react at that point? And it's just not the Italian bank bailout that's failing. The Greek bailout that was so in the news this summer is starting to show a little cracks in its facade, as last week Parliament approved yet another set of reforms to unlock another portion of the bailout. Now, are you really comfortable with this kind of bailout being approved just ahead of the supposed transaction taking place? Shouldn't there be just a little bit more foresight and planning into this? And in London, 30,000 properties are expected to be just dumped onto the housing market in 2017. There's no liquidity to absorb that. The oil price has fallen below $35. The outlook is $20, which is causing major problems for the oil-producing nations. Norway being the last country to go in the red about this. The Norwegian currency has finally slipped below the Swedish currency of its next door neighbor, something that hasn't happened in the entire period when Norway has been producing oil. So we have some very interesting commentators today. We've got Nanok, who is a futurist and analyst. We've got Datavetaren, who's very well known in the Bitcoin community and is frequently giving insightful interviews as to that effect. So, gentlemen, hedge funds are starting to look insolvent. There was a Third Avenue credit fund that went belly up the other week, followed by 1.3 billion in Stone Lion Capital that have both suspended redemptions. Where are we at?
Well, the way you put it, with all those news all together, it sounds like more or less a catastrophe is waiting to happen. And this is something we've been predicting, many of us in the Bitcoin community or the libertarian community. But the question is when it'll happen.
Right.
And I'm not at all sure that this is happening right now, but that really sounds, well, not really good at all.
Well, you can kind of see when you're looking at the numbers that the situation is not stable, yeah? At least that's my take on what I'm seeing in the news, what I'm seeing in the numbers. And so kind of like an oversaturated solution. You don't know what the crystal is that'll start to precipitate out all the crystals from this solution. But you know that it's likely to happen at some point in the future. Like you say, how long does it take to catch a fish?
Yeah. What's clear is that the economists or the people at the central banks trying to set the rates don't have a good idea on how to combat the situation. I mean, the tools they're using, they're out of resources, or out of tools, more or less. They can't just lower the interest rate forever.
Right. I mean, you had this solution to make people borrow more money in order to fuel consumption. But we've had essentially free money for the past 7 years. And people have been going just haywire, printing money essentially since August 15, 1971 anyway, when there was no more political bloc to doing so. But it's more than that, isn't it? I mean, do the Federal Reserve, do the central bank economists really understand what's going on? If we're looking at their history, are they trustworthy in their predictions?
Well, you've seen that chart from Riksbanken, the Swedish trajectory or the outlook.
Yeah, let's take a look at that.
Predicted.
Can you describe what we're seeing here, Nanok?
Well, this is probably the sort of almost famous now hockey stick chart from the Swedish Riksbanken, the central bank of Sweden, which is one of the oldest banks in the world. And they're projecting a sort of a hockey stick development. If you look at that chart, each year forward, they've been predicting a rise in the economy in Sweden. And each year they have to sort of change that prediction because they have no clue, really. Or?
Right, Datavetaren.
Yeah, the thing here is that their prediction is, I mean, provably wrong for a number of years, right? So that, but I would like to take a step back and talk about what the interest rate really means, what that it actually means for banks. So interest rates, a positive interest rate means that banks get free money when they park their money at the central bank. Now, the interest aspect here is that when Fed is rising their interest rates to 0.25%, it means that all the bank accounts at that central bank, the Federal Reserve, they will basically get free money while parking their money there. So the only way the private banks in the world, and I mean really the whole world, because dollar is actually a reserve currency, it basically means that if inflation doesn't actually happen, it means that the commercial banks all over the world will get free money, which is 0.25% of all the capital they have at the Federal Reserve. What this means is that all the money that are misallocated in different risky projects all over the world, they will go back to the Federal Reserve and park the money there, which means that all the emerging markets will crash if that is actually the case. And we will see in the next couple of quarters if that is actually happening. That's my comment on this situation.
Nanok, anything to fill in there?
Yeah. Wouldn't you also agree on that the continuous QE ongoing activities in the world, both in Europe and the US, is in effect making those people without other assets than currencies much poorer?
It is, absolutely. I mean, if you're looking at the QE that's been going on, QE being short for quantitative easing, meaning printing money like a madman and like there's no tomorrow. I mean, it's just a fancy word for money printing, right? So the amounts that have been printed are staggering. We're looking at a four-folding of the US dollar money supply. And at the same time, velocity has halved. Meaning...
Yeah, this is a currency war, more or less.
This is a currency war. This is absolutely a currency war. This is about who's going to be the dominant currency. This is going to be who has got the default trade currency on the planet. This is about what do you use to trade oil for today. And let's get back to that.
So let me explain a little bit about how that kind of money printing works. So what happens here is that the Treasury of the United States is issuing bonds, and these bonds are being sold and on the open market. And if you're lucky enough, I mean, there are like states like China and other states of the world are buying these bonds for on an open market. But if there are not too many people buying these bonds, then the Federal Reserve buy these bonds.
Right.
Which is kind of a Ponzi scheme to me, at least, because I think it's completely outrageous that your own government agency is buying your own bonds because no one else is doing that. It's just, that's completely wrong in terms of the capitalist idea, where the risk and reward taking is supposed to be that if you don't find a buyer, you should deserve the loss. But that is not happening here. So that the entire economy is skewed because of this misallocation of capital, because they're basically financing. The Federal Reserve is basically financing the U.S. government. And that is no longer the case, but that is true for the ECB, because Fed has ended their QE program after being running that for a couple of years. But now ECB is doing the same thing.
Right. And how much money is the European Central Bank printing every day?
Yes. It's an enormous amount of money being printed every month. So
it is.
And I think it's completely insane, because it's misallocating capital. That's basically what's happening here, because I think that the most important thing with a capitalist society is that risk must be balanced with reward, and that is basically that's not happening here.
It's absolutely not. Yeah. I mean, this goes beyond just buying the US government bonds that nobody else wants to buy. If you're looking at the ODIC countries, the Organization of Dollar Importing Countries, which is not a formal term, it's kind of a derogatory term, but still, you've got a number of countries that up until now have essentially been funding the United States deficit. You have China, you have Japan, you have India, you have Brazil, who have been buying the bulk of US Treasury bonds. And all of a sudden, China, which was the major buyer, is not buying anymore.
Yeah,
a couple of months back, China started selling US Treasury bonds. Not just not buying, but actually selling them. And this is interesting because, just like you say, Datavetaren, the Federal Reserve stepped in and made sure those bonds never hit the market.
Yeah, exactly. So the thing here is that I think it's okay to sell the bonds on an open market, and that's the way you finance yourself, because what happens then is that somebody else than your own country is taking the risk of financing your deficit, right? And that's a risk you're willing to take. But the Ponzi scheme that is happening is when the central bank of your own country is buying your own bonds. That's just completely wrong, right? That should not happen.
I can't help laughing here.
So what I'm saying is that we need a system where this is impossible. This should not be allowed. It should not be even allowed politically. It should not be allowed mathematically. So this is going back to the Bitcoin.
It wasn't allowed. It was illegal about 100 years ago, right?
Yeah. So this is going back to the Bitcoin community and the Bitcoin ID, that you're not supposed to have a system where you can sell things to basically fund your deficit with no one taking the risk. That should never happen. You should not be allowed to do that. You should not be allowed to do that politically. You should not be allowed to do that mathematically.
Right. And as Nanok said, this was illegal until just a couple of centuries ago or something like that. I know you've been studying this in depth, Datavetaren. When did this kind of Ponzi scheme become legal, and how did it become legal?
Actually, this goes back 300 years ago, where the Bank of England, these 300 years ago, all the central banks were being formed in the Western world, and except for the United States, that was formed like 100 years ago. But Bank of England was founded in 1694. And that was a merge between private and public capital, because the King of England couldn't fund his wars at that time, to the war at France. And so he needed capital. So he said to the private banks who wasn't willing to give him a loan, so let's build a new bank called the Central Bank, which is the Bank of England. Let's join our forces together and fund this thing together to split the risk and reward, which means that the private banks and the public bank, the king, was awarded, but everyone else basically got a loss on that thing. At least that's my perspective on it, because here you have the private interest, the private capital, and the public capital of the king was basically the joint interest of the England, but everyone else got suffered because of this thing. Because again, the risk and reward is not being really properly managed here. So that's
exactly.
Why would the powers in B, I mean the people deciding over the central banks and etc., why would they take on risk if they don't have to? I mean, if they're in charge, they can do whatever they want.
It's fully natural. Right? Once you're managing the money supply, if you don't have to take risks about it, it's perfectly natural not to. I mean, it's the exact same thing happened in 1971 when Nixon canceled the gold standard. Actually, just said that the United States is not going to pay back its loans, which would normally be called bankruptcy, but nobody dared call it that at the time. But again, it's kind of funny to see again how you're breaking the financial stability in order to fund wars, which was exactly what happened with Nixon, because the U.S. gold reserves were depleted because of the Vietnam War.
So that is entirely correct. So here is another example: is that a U.S. president does not have the reserves to fund this war, so therefore they just go off the gold standard. The gold standard was formed because there was a way of trying to convey trust to the people, to say that we're going to not debase our currency for just a whim, but that's exactly what happened, right? They were just debasing their currency, because when they went off the gold standard, they could just do whatever they want, right? And so they could print any money they would like, and they could just issue bonds, and if they can't find buyers, they will just buy them themselves. And that's just I would say that's a deception to the people, because people of the country does not understand where money comes from, what money is.
No, it's complex. I mean, it's an illusion.
Economists.
Yeah, that's why it'll happen again. It'll happen again.
It will happen again and again.
I mean, currencies just last about 3 or 4 decades generally. And next, the interesting thing is what will happen next. I mean, we all three agree that Bitcoin is a better system, but I don't think that the powers in B understands that yet, and they will have several years left before they do.
John Tonis had a great quote from 2 years ago.
And the next thing they can do, I'm sorry that I'm interrupting you, but I think the IMF and the SDR, the currency of the IMF, is probably going to be the next, the last point of no return, more or less. They're going to issue SDRs.
The SDRs, which means special
just
drawing
to
rights.
Keep this thing going.
That's a system where you have a currency basket of different currencies that are together building a reserve for the world, and everybody can then take a loan from this basket. The problem with the SDR system is that every 5 years, they try to calibrate this basket and determine the weight of each currency. And China is not included in this currency basket because they weren't present to begin with. But what kind of idiotic system is a 5-year calibration? That sounds like Soviet Union, right? You have a 5-year plan of what you're trying to do. I mean, this is outrageous. This is crazy. This is crap, right? You should have a system where every currency is automatically being determined by the market. There should be a market price for what your country is worth. And what better system would Bitcoin be? Because Bitcoin would be an open international currency where every stakeholder, which means every superpower, whether that's Russia or whether that's United States or the Britain or whatever country, Europe, they should buy into this currency to determine their quota of what their power, the geopolitical power they have, right? So, and this thing should be determined for every second. There should not be a 5-year quota. That's just a crazy system, I would say.
Right, you're essentially saying that the market must determine risk and reward. instead of being political decisions. It sounds like we're fairly in agreement that Bitcoin is a solution to the serious instability we're seeing on the market right now. And interestingly, one of the Swedish tabloids recommended Bitcoin as a 2016 investment. Others have observed that it was the best performing currency in 2010, 2011, 2012, 2013, and 2015. Now, Nanok, you have quite a bit of history with Bitcoin. In fact, you were a reporter at the Swedish state television interviewing me about Bitcoin in 2011. That was early. So
yeah, spring 2011, I remember. That's around where you put all your savings into Bitcoin, right?
I did.
Yeah.
And then I lost most of it at empty gox. But then again.
Yeah, me too. But it's very interesting, the narrative in the media right now, because it's very fulfilling for a guy like me who has been working in communications for KNC, for instance. For the narrative has been for such a long time that Bitcoin is crap. It's only for criminals. Just exactly the same way as it was with the web in the beginning, the internet. It was just for criminals and cyber porn and stuff. But now, after 5 or 6 years of Bitcoin running, the journalists have to sort of realize that it isn't crap. And now they sort of have to triangulate back somehow. And it's very interesting that just 6 months after this spring, they were still telling us that Bitcoin was only used for criminal activities, and ransoms and stuff. But now it's suddenly an investment advice. And by the way, you should never take investment advice from a tabloid, You
shouldn't, right? I mean, in the same article, they started saying that the economic recovery will continue well on its way throughout 2016.
Yeah, that's crazy.
Yeah,
they don't know anything about that.
So I don't believe a word of that. But it's like you say, the interesting is the change of narrative here. And just last week, we also saw that the SEC, the Securities and Exchange Commission in the United States, which regulate a lot of financial trade, approved stock issuance, just not on a blockchain, but on the Bitcoin blockchain. Yeah. So how does this factor in?
What I'm thinking about that is, if the SEC sort of approves the issuance of stocks and other certificates on the Bitcoin blockchain, somehow they have brought in the blockchain into the legal system. Because then after that approval, somebody could go to a court and say that, something's gone wrong here. My assets, if somebody sort of steals your real world assets, even if they're connected to a token in the blockchain, you can go to a court and have a judge give the people back those real world assets, which you couldn't do today, because a token or a coin today is not a real asset in the current legal system. So that's why I think the SEC decision is really interesting, or the way they're thinking about this.
So I would like to step back on the ECJ decision, right? The European Court of Justice, which is a great decision. It's a wonderful decision where they determined that Bitcoin should be classified as a foreign currency, which is exactly the right way of addressing this issue. It should be just a foreign currency. And this crap where people saying that, this currency is not a legal tender currency. I mean, come on. The dollar is not a legal tender currency in Sweden, but you can still use it. You can go to a restaurant and ask if you would like to pay your meal for dollars, and the merchant will just say, okay, that's fine. And then you can use your dollars. So exactly for the same thing, you can use your Bitcoin. And it doesn't matter if it's a legal tender currency. Actually, that's a good thing, because it means that the merchants voluntarily would like to accept your currency instead of this crap fiat currency that is issued by the government.
Right, instead of being forced to.
That's actually a good news that Bitcoin is not a legal tender currency in a country, because anyone who would accept it means that they actually believe in this currency, instead of having to force to accept the currency, which is actually the other way.
That is an excellent point. And to add to that, when merchants are forced to accept a currency, it's more often than not in failing economies at a grossly distorted exchange rate, which is priced out of the market.
Yeah, in this case,
interesting enough, also, I mean,
I would like to say
EU now,
something
Bitcoin is a currency.
Andreas,
You're both talking here. Sorry for interrupting. No, go ahead, and we'll get back to Datavetaren.
About that decision from the SEC, in the States, Bitcoin has not really been approved as a currency. It's been sort of categorized as 4 different types of like a commodity or a currency from different authorities in the States. But in the EU, we have now a decision that it's a currency. And in the States, we have a decision that you can issue certificates or stocks on the blockchain. So maybe we'll see a development where some companies will establish themselves in Europe because of these decisions, and other companies sort of tailoring to the stock market will establish themselves more in the US, which I think is interesting also.
That is interesting. Datavetaren?
Yeah, well, I was just thinking about the thing that I saw a video on the net, on the YouTube, with Andreas Antonopoulos. He was saying that this talk about a currency to have intrinsic value, it's just that's a misnomer, because no currency have intrinsic value in the world. What is interesting is intrinsic utility, which means what can you use your currency for? And if you apply Gresham's law to that, it means that Bitcoin is programmable money, which outcompetes every currency on this planet, if you think about it. So to me, it's just a no-brainer. It's just, there's no chance that there will be any competition in the currency market when it comes to Bitcoin. It will definitely be the international currency of the world.
Yeah, Bitcoin's problem is just that it takes a long time to understand that part.
Yeah, absolutely. But the good news is that the only thing you have to do is to wait, because the other currencies can never, ever get to that point. How do you make a fiat currency programmable? Yes, you can't. It's impossible. How can you make a fiat currency to become a blockchain currency? You can't. It's impossible. So the only thing we have to do is basically wait.
Yep. Also, with the observation that it takes time for people to understand Bitcoin, any new technology takes about 10 years until it becomes comprehensible to cross the chasm from early adopter to early mainstream. You can observe that this happened with streaming video, which hit porn sites in 1996. YouTube was launched in 2006. Same thing with blogging. It was active about 10 years ahead of WordPress, Typepad, and all of these things that made it available. So is it not reasonable to expect usability and comprehensibility for Bitcoin at about the same time frame, maybe 10 years after launch? So that puts us in the 2019, 2020 time frame?
Sounds good. Yeah.
I would say that one of the best analogies I've heard you talk about is that the analogy between email and the postal service. So Bitcoin is email, right? Email in the beginning was a very, very complicated procedure, right? It wasn't that easy. You had to learn these email addresses, the domain name, and all that stuff was complicated to ordinary people. But eventually, they understood it, right? They learned it, how email works. And I would say that Bitcoin has a way to go, because you have to make it much more user-friendly than it is today. Mm-hmm. But we will eventually get there. And exchanging things for Bitcoin on the internet takes about the same time of, the kind of a leap of understanding as email as to the postal service. And the banks, they are struggling and say, well, we can make you post, we can print your postal cards and then send them to the recipient for you. That's basically what their banks are trying to do. This, all these projects that they have where they're trying to say that they are the blockchain, but what they're doing is that they are just doing the blockchain internally between the banks, which means that equivalently, that would mean me typing some email, going to a postal office, and then they will digitalize it, and then they will send to another postal office, and then that postal office will bring the email to the recipient. And of course, everybody would see that that's a crazy idea. I mean, why not just use email from person to person, from peer to peer? And eventually people understand that, because it's much cheaper, it's much faster, and it's better in every aspect. I can understand that people are nervous about, the volatility of Bitcoin. It's worth like $450 one day and $500 the next day, or $350 the day after. But that volatility, that will go down. It will disappear as more people are going into the system. So I wouldn't worry about that. It's a good thing.
Right. One final thing before we close for today, and this question goes to Nanok. Will we see a crumbling petrodollar, as in a hard connection between oil trade and the US dollar in near term? And what do you think will cause that? And if something causes that, let's leave the floor open. What impact would that have for the current United States dominance over the world?
Well, generally, I'm sort of thinking that we will have a crash of the US dollar, but it's very difficult to say when that'll happen. And it is connected to, partly to the price of oil, of course, and also the situation in the oil-producing countries. But it's not really the areas I'm studying mostly. I'm sort of, I'm surprised that the oil price have fallen so much recently, really. And the factors, there's so many factors involved, it's very difficult to predict that. I'd say that we'll see a crash in the US economy sometime between like tomorrow and 10 years. But more than that, it's very difficult to predict.
But you do see that the situation is not stable.
Yeah, yes, it's really unstable, of course, because they're printing money like crazy, and they're doing many different kinds of actions to secure the oil from different regions.
So, I mean, the US have $18 trillion of debt, right? So is anyone really thinking that anyone will pay that back? I mean, it's a lot of money, right? If you want to put that into perspective, it's about, about 100% of their GDP, of the US GDP. That's how much debt they have. And the question is, do you see any tendencies that are trying to balance their income and their revenue with their spending? And I think that if, what you're looking at and, what happens in the economy, it seems that, no, that's not going to happen anytime soon, which means that the debt is going to grow, which means that whenever the interest rates are really taking off, and then I mean not the interest rates on the currency, but on the interest rates on the bonds, if that goes up, then there will be a problem for the US government to pay their interest rates to, China and all the other economies of the world.
Yeah, but they can draw this out for a long time forward. I mean, the low oil price is good for the US in many ways. Of course,
it's not likely that they're going to default anytime soon, but it's going to, once people think they're going to default, the interest rates are going to spike, and that becomes a self-fulfilling prophecy, right there. And once the interest rates are high enough, they're going to default, like any other country, like Greece or whatever, right? So it might
take even longer time than you think because of the US military. If you put all the military resources of the world together, the US have like 3 or 4 times the resources of the rest of the world. So they have lots to take from. They could lower their expenditures on the military.
So all what you're saying is that if the rest of the world accepts that, which means China and Russia and other superpowers of the world, if they would accept that, yes, then they can finance it. But as soon as they say no, and they will not going to buy the US bonds anymore, then US economy will crash. But, yes, I mean, the Treasury, the Federal Reserve can buy all the bonds, like 100%, but that will mean hyperinflation in the US economy. Which is the same as a crash. So it doesn't matter.
All the other countries will also be very shaky at that time. So they won't say no easily. They'll really sort of try to drag it out too themselves, don't you think?
Right, because nobody wants a worthless dollar in their currency reserves.
Exactly.
That's true. But maybe they will try to get rid of their dollars to exchange them to something more valuable. Once that horse is through the gates and starts running, that's going to be very interesting, right? What happens if China sells everything they have? That's going to drive everything into the ground for sure, right? That's going to crash everything. So well, I guess that the US can continue whatever they're doing as long as they can. They have to be careful, and I think that they are not stupid. I mean, they have great politicians, and they definitely know and understand this geopolitical game. They can't do whatever they want. They have to balance these risks, right? What happens if Trump becomes a president of the United States? I don't think that that's going to be very fun anymore. That's for sure, right? I think that's
often people sort of also exaggerate the crash thing. I mean, we've had currency crashes before, like in 1971, and generally people don't really perceive it as a crash, even though it is in the economy. It might take a much longer time. It might be a sort of let's say the Bitcoin price raises in value very slowly over the years to come. We might see a sort of a slow over.
You're seeing a stagflationary scenario?
Yeah. Well, actually, that is actually a very good thing, because I think that Bitcoin can rescue us from the crash. Because if you could safely, continuously balance your reserves to something that is not controlled by a government, then you know that not a single government can crash this currency, which is a good thing. And I think that once, at the moment, unfortunately, most economists in the world, they don't understand Bitcoin. They think it's a drug currency and, you know, illicit trade and other stuff being used for. But I think that once countries understand that this is actually the new digital gold, they will use that as a hedge to preserve their wealth wherever that wealth comes from. And why should you preserve your wealth in US dollars? I think that's pretty risky at this point. With $18 trillion in debt, and possibly the Trump becomes the president, I think it would be wise to perhaps use another currency as your reserves.
So with this expert commentary, we've had quite a bit of insight into what we can expect in the coming years. This is Liberty Talk 46, and I'm Rick Falkvinge. Visit our sponsor, Private Internet Access. Good night.
This report is presented by Private Internet Access.
Produced using exclusively free software.